Hi class. In this video we're going to look at some examples from chapter 23. So we're going to look at some different tools we can use for financial statement analysis. In this particular question we have a comparative balance sheet and we are to do a vertical analysis. So this is really helpful. It gives us a chart. So basically we just have to fill in the blanks in the chart. So we're doing a vertical analysis. In other words, we're doing percentages. We're working up and down, thus the term vertical. And we're doing percentages of each asset in terms of total assets. So I actually already filled this one in. So we're doing, for example, cash as a percentage of total assets. So cash as a percentage of total assets would be $165,676. And we're going to divide that by total assets, which would be $854. So that gives us 19.4%, and the instructions say to round to one decimal. 2018 would be the exact same process. You just use the 2018 number, so $142,200 divided by $711,000 will give you 20%. Accounts receivable for this year would be $198,128 divided by $854,000, be 23.2%. And you would just go through that process the whole way down, figuring out what percentage of total assets would be each individual asset. Now when you get to total assets, this one would be $854,000 divided by $854,000, which is 100%. This one would be 100% as well. So you should end up with 100%. And if you wanted to double check, you should be able to add all these up, and they should total to 100%. Cash is 19.4%, accounts receivable is 23.2% out of 100. Each of these makes up some component of that 100%, so these should total to 100%. Now once you do that, you can use this tool to compare some numbers. We can look at this and we know that of our total assets, as far as cash, our percentage of cash has gone down, which probably means somewhat of a decrease in liquidity, although we do have some other fairly liquid assets here. So this just tells us what percentage of assets is each individual asset. You would do, this is a partial, so you could do this process all the way down with liabilities and equity as well. So this is a vertical analysis of the balance sheet. The previous question is a vertical analysis of the income statement, which basically works the same way, except for you can't use total assets as your denominator. We're going to use, in this case, net sales. So net sales would be 100% of itself. And then you would figure out of net sales what percentage is gross sales. So be 1466820 divided by 1405000. Sales is 104.4% of net sales. You would go through that process all the way down. And then they did the same thing for 2018. So same process. This is a vertical analysis, and you can do it for income statement or the balance sheet. All right. Horizontal analysis is a little bit different. We are looking at our calculations across rather than down. So we're looking at the change from year to year. So for sales, the column that has change is just the dollar amount change that was made, 1628760, and so 1470000. It's like it was $158,760 change, if I did that right. And the percentage change looks like a 10.8% change. Let me check that, make sure I did the math right. All right, so the process is, let me go back to my question. You can see it a little better. The process is to figure out what dollar amount change took place, and you're going to enter that there. And then the percent change is you're going to take whatever amount you calculate as the dollar amount change, and you're going to divide it by the oldest year. So to get that 10.8%, I took $158,760 and divided it by $1,470,000. That gave me 10.8%. Let's just look down here and pick another one. I was looking for one that went down, but I don't actually see one. So this one changed $9,300. And the change would be $9,300 divided by 60,000, 15.5%. I was looking for one that went down because if the change was a negative, in other words, if this 60,000 went down to 50,000, then the change would be a negative $10,000. So your percent change would be a negative. So these positive percent changes mean that these amounts went up from 2018 to 2019. If you saw a negative over here, it would mean that there was a drop in 2018 to 2019. So that's a horizontal analysis. A horizontal analysis of a balance sheet exactly the same way. You look at the change, calculate the dollar amount change, and then divide the change by the oldest year, and that'll give you the percent. Same thing with that. You could have negatives if you had a decrease from the oldest year to the newest year. All right, so there are a couple of problems that have to do with horizontal and vertical analysis, and then the rest of them are various types of ratio calculations. So I'm not going to look at all of those. I did want to just look at a couple that are a little bit tricky, but for the most part, you should be able to just look at the examples in the book and kind of follow along. All right, so let's look at two more. This one, we have a comparative income statement, a comparative balance sheet, and it says calculate the price earnings ratio for 2019 and 2018. So we've got common stock selling price at the year end was $2 and one was $1.60. Oops. Our denominator or price per earnings is the earnings per share. The price would be the numerator, price per earnings. The earnings would be the denominator. All right, so our market price is, let's see, $2 for 2019 and $1.60 for 2018. Our earnings per share, you actually have to calculate before you can do the price earnings. Let's see. So earnings per share would be the number of shares of stock that you have outstanding divided by the earnings, which is here in your comparative income statement. So to figure out how many shares of stock you have outstanding, they don't actually tell you that, but they give you common stock here, and this is in the balance sheet, common stock dollar values, and it tells us that those common stock are worth $1 par. So if you remember back in the previous chapter when we posted sales of common stock, when we used that common stock account name, we always post to the common stock account name the par value of the stock. So if there's $300,000 worth of common stock outstanding and each of those is $1 par, then 300,000 divided by $1 par gives us the number of shares, which is 300,000 shares. All right, so to get the earnings per share, we're going to find the earnings. So in 2019, it was $109,650, and we're going to divide that by the number of shares outstanding, which is 300,000. So our earnings per share looks like 36.6 cents. Same thing with 2018. Our net income was $106,250. We don't actually have to calculate the common stock again because it was the same. So we're going to divide that by 300,000. So it's 35.4 cents. 35.42, sorry. And you know, I hope I rounded correctly to 2 decimal places on the previous one. Let's just see. God, I can't type either. Let's try this again. This one should be 35.42. I guess I can't talk and type at the same time. Let's see if that works. Well, I did not calculate something correctly. Let's try this. This is what happens when you don't do this very often. Well, it would help if I typed this in as cents. I am so sorry. Let's try this again. $106,250 divided by $300,000. 35 cents. If I can get my decimal place in the right place, it might help. Aha! That helps when you read the instructions and pay attention to what this is doing. So I think this one's actually 36 cents. See if that works without having to recalculate it. And it just took $36. Gotta love Connect. That may have rounded it up to 37 cents. 0.37. Finally. So after all that, your market price per share is just what's given. Your earnings per share, which I greatly complicated, was your net income after income taxes divided by the number of shares outstanding, which is right here, and you have to figure that out from the par value. So sorry I made that so complicated. I did want to basically want to make sure you understood where to get the number of stock outstanding. All right, let's look at one more, and maybe I won't flub it up as much. Okay, we've got a comparative income statement, a comparative balance sheet, and it says calculate the inventory for each year. All right, so we've got to calculate our average inventory. Which we will have to calculate by looking at the data that we're given. And we have a beginning inventory that says for the year 2018. So the beginning inventory for the year 2018 is actually some extra information you need that's not included in here. And I wanted to look at this one and also number 12. We're not going to look at it, but for that one you have to calculate the average of something. I can't remember off the top of my head what it is, but when you have to calculate the average of something, you need a beginning balance at the beginning of the year and the balance at the end of the year, and you're just going to divide that by 2. So our average inventory for, let's see, we're at 2019. Now in 2019, we're going to look at the inventory in our balance sheet, and at the end of 2019, it was $124,500. We need the beginning balance of that inventory, so we can take an average, but balance sheet doesn't have the beginning balance. So to get the beginning balance for 2019, we have to know the ending balance of 2018, because whatever we ended at the end of 2018, that just rolled over to January the 1st, 2019. So this on 2018 is actually the beginning balance of 2019 as well as the ending balance of 2018. So if we take the 124,500, add the 93,000, and then divide that by 2, I get $108,750. Let's make sure I did that correctly. 108,750. Oh, I can finally do math. All right, so that's $108,750. And you're going to have to go through the same process with 2018. So we have inventory, and this one is the ending inventory for 2018. You need the beginning inventory for 2018, which is actually the same thing as the ending inventory for 2017. Now, we don't have a 2017 column. That's where this comes in. Instead of telling you it was the ending inventory for 2017, they just went ahead and told you it was beginning for 2018. So you would take the 89,000, which was the beginning inventory, and 93,000, which is the ending inventory. Divide that by 2, and you get $91,000. So that's really the only thing you have to calculate, and make sure I did that one right. As far as coming up with a number, you're just going to finish out the calculation, figure out what your numerator is, and again, look at your textbook examples and then pull those numbers directly off the data. You won't actually have to calculate that. And number 12, like I said, you're going to have to calculate a average of something. I couldn't remember which one this was. Average accounts receivable. And this one says accounts receivable turnover on December 31st, 2019. So again, find your accounts receivable. Whatever it was at the end of 2018 is the same as it is at the beginning of 2019. So you're going to have to use both years to do the average. So I did want to point that out. But overall, this chapter, it shouldn't be too difficult, just basic math. Mostly it's knowing what to put in the numerators and what to put in the denominators. Best advice I can give you is just look at the list of ratios and the calculations for those ratios in the textbook and just kind of use those to go through the homework, and I don't think you'll have any problem. If you do have problems, you get stuck, as always, feel free to contact me and I'll try to give you a hand. Have a great week.